Hello everyone. I am going to go over my daily plan as well as the live market commentary I provided through StockTwits. Now today, as most of you know if you are reoccurring viewers, today was the first day of my room. So I haven't been able to dedicate as much time to StockTwits obviously, as most of my time is dedicated to the Discord. If you guys are interested, a link to my website is in the description. It's ChocolateLabTrading.com. I would also like to say thank you to everyone here subscribing on the YouTube. It really does mean a lot. Hit 120 subscribers, I believe it was this morning. So yeah, subscribe if you enjoy the content. So let's get into what I was looking at for the daily plan. Before we get into today, it's important to note what happened Friday. So here we are. We built this balance range that we've been talking about for a while, and as we could see through the TPO, where are we? There we are. We closed below of it on Friday. So given that we closed below, that gives us a few scenarios to watch coming into Sunday session and Mondays, and it kind of will dictate what to look for. There's a few scenarios that happen. So let me come here. Now I believe you could see that. So I uploaded, as I do every week, a week ahead video of what to expect for the Sunday session, Monday session, and kind of overall of the upcoming week for members. And in yesterday's video, I highlighted this area, saying that into this Sunday session, we want to see how price is going to react here. Bears are going to want to defend this. Bulls are going to want to come over this and build acceptance over, right? And sure enough, that's exactly what happened. Once Sunday session opened, this was the high. I believe it hit 36.13 and 2 ticks, or maybe 36.14, and provided over 40 points of a sell. I don't personally trade Sundays, full transparency. I did not take this trade, but using the order flow and TPO, market auction theory, all those things, all the tools that we use in the room, we're able to find levels like this, and this is how we find levels for our daily plans. So I personally did not take this trade, but it is something that I was looking at, and I watched on my screens, even though I did not trade it, to help me build a bias coming into today. So let's look at my daily plan. Creating a daily plan, step 1. Checking the overnight TPO. Lots of vital information that can be taken here for traders, showing us signs of what to expect for the following session. Cannot see it, I will cover some. Alright, so this is the balance area. Close below. And things we have to look at is, I apologize, excuse me. Are we leaving structure below of us? Are we leaving structure above of us? Are we trading in or out of balance? What do these market profile distributions look like? What do the highs look like? What do the lows look like? Where is value? Are we building value? Are we building value lower, higher? These are all things that we have to be aware of if we're trading, right? If you don't know where we're trading in the market auction, you shouldn't be trading because you don't know what's going on. To be blunt. Alright, creating a daily plan, step 2, looking at the daily footprint. Where can we see buyers located, sellers, where would they want to defend / add to their positions, all things you must know to be an active market participant. This chart looks foreign to you. Alright, all these footprint charts, do look foreign to you. Linked to the home of my YouTube channel, I have a quick video that shows you how to read these charts. So this is a daily chart showing the transacted volume, and this is Friday's close. You could see Friday closed below this balance area with a slight bid, but although this is a huge buying imbalance, you see 90.3 thousand contracts bought over 6,500, you have to look at the context of what is above, which is a heck of a lot more contracts stuck. Where do we have active buyers? There's a bid trying over here. Sellers are trying to sell the balance area, which is what we were looking at, and that is what provided this. We had a level here that provided us a long. But I actually did suggest, or I said to members that even if I were to trade the Sunday session, I would not take this long, but I'm going to go over with them today an hour recap of how a long could have been taken here and how it was a valid setup. But again, I do not trade Sundays. But there's a lot of things that we could take from the footprint, right? We could see where buyers and sellers are active, where there's large pockets of volume, and they're all things that help us build our bias and edge in the market. I hope that all makes sense. Important part down here. What you are looking at is transacted volume on the ES, or the E-mini, whatever you would like to call it. That's right, no resting orders on that market makers can spoof. I know a lot of people like Bookmap. They use the DOM. No disrespect, you could use it. A lot of people do use it very successfully, so there's that. But with the footprint, we're seeing transacted volume. There's no spoofing. To me, it's less subjective, and that's what we want in our training. We want to take out as much subjectivity as possible, right? Be more objective. Creating a daily plan, step 3. Looking at a clean candlestick chart, where can we infer using our tools, or our other tools, where retail trader stops are. We'll cover some in video recap. So I've spoken about this quite a bit on the YouTube, that traders like to make their stops above highs, below lows, and that's something that isn't just retail traders. This is something institutions use, larger hands. For the most part, if you're trying to go short, where's the safest place to put your long? Above the high? No. If you think it's going down, you don't think it's going to break the high. Very simple. Yeah. There we are. Alright, started discussing the current market auction with the CLT crew this morning at 6:30. Then we looked at important areas that our tools are highlighting to us and why they are highlighting it. To be a self-sufficient trader, you must see all these things for yourself. That is what I'm educating. I have a very small group right now. This is what I prefer. A small group that we slowly grow, so we get everyone accustomed, and then as people join, it's just a few people at a time, and it makes it much easier for me, and I could dedicate the necessary time where it's needed. These are all things you must know. Look at how jam-packed this week is going to be. So this is obviously the opening week. I have an introductory course that I've spoke about. I had a few videos for people to become accustomed to Sierra charts. And if you're not familiar, in the room, I'm going to be live every single day before market open. I provide the daily plans obviously in the room as well, but in the room I have it written in written form. And in that written form, I'm discussing each of the levels, why we're looking at these levels, everything that we could take from the TPO, the footprint, even clean candlestick charts, everything. And then at 9 a.m. I hop on mic. If anyone has has questions about the daily plan, obviously they could ask it, and I'm just going to run through the levels quickly and go over what I have in the written form, just so everyone has a good understanding and understands how I make my daily plans, so then they can make their daily plans. And then Monday, Wednesday, Friday this week, I'm going to be live with all the students at close, and that's where we're going to do our introductory course, introducing everyone to the market logic I use, the footprint, the TPO, all of that stuff. And twice a week, every week, I will be live with students, and we will have our market recap, similar to how we have on the YouTube, but in the YouTube it's a little bit in not as much detail. And yeah. Alright. So here's today's daily plan. Going to be on mic, blah, 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 blah. Alright. So this was the daily plan. I had a very cautious buy zone here. Cautious sell zone, sell zone, sell zone, sell zone. Now, if you do follow me on StockTwits, you know that I was selling over here at the 76s. I scaled in there, and we'll cover that a little bit to come. Cautious buy zone could come here, not marked because of the order flow. So I had this as a potential area I would like to be active, and here as a potential area I would like to be active. Now, the reason I didn't marked this on my daily plan is because it kind of depended, or not kind of, it did depend on where the market was going to open. And since I post my daily plan about an hour before market open, I obviously don't know where we're going to open. Now we opened above our pivot, which our pivot was down here we were talking about, meaning that, as I discussed with members and we'll get to, I was looking, or I said we should be looking for a potential long here. I unfortunately missed it, and that, as of right now, it is 12:49. This is the low of day, so that was a miss, but that wasn't my only miss of the day. I missed another trade by literally one tick for a fill before I got my trade. And I was talking about this with some members. You're going to miss trades. But the thing, or one of the things rather, that separates people who are able to trade for a living and people who are unable to, is that you cannot let these things affect you. I'm not trying to be on top of a soapbox. I struggled with this for a very long time. But at the end of the day, if you want to do this for a living, day in and day out, you need to get over that. It's black and white. You need to have the proper discipline. Alright, so let's continue on. Looking at the transacted volume on the look at the transacted volume on the daily, folks. It is telling us a few things coming into open. We'll explain a bit. Alright. As I said, this is a daily footprint. And what do we see coming into open? Well, I think we all could see that a majority of the volume is down here, and we're trading up here. What does that mean? All the people who are trying to short sell or sell over here, all the short sellers here, their position is underwater since we're trading over here. So what's going to happen as we trade above this large volume area? They're going to start exiting their position slowly, and then faster as we come further away from their average. And that's why we have these thin volume nodes. For the most part, this isn't buyers and sellers transacting with one another. This is short sellers marketing out of their positions to hedge their loss. Or minimize their loss, rather. I apologize. Is there anything else? No. Okay, that's it. See how buyers are attempting to support there. Should be no surprise why. They still have more work to do if they want to reverse. So now, into open, we start selling down a bit to our pivot, this bottom of the balance area. And since we're opening above, we want, or bulls rather, want to hold this for a continued move up. And it's the opposite for bears. They want to move the selling imbalance down on the tape and reject here. Yeah, I hope that makes sense. Look at the 30 minutes so far and where volume is being transacted. There's a lot we could take from this. We'll cover a little bit in video recap. So this is the sell that we had down, and we could see we don't see a clear B shape. Let me make this bigger. We don't see a clear B shape, P shape, not the things that we look for, at least not initially. Now, as we'll get to, I was supposed to be looking, again, supposed to be. I mentioned it and failed to remember in real time. But 36.1825 to 36.20 is where I was looking. And as I said, this ended up being, as of now, the low of day. So if you're looking for the long, as price trades above, this selling imbalance flipped to a buying imbalance. I just took a screenshot right before that. What I was trying to point out is we don't see a clear B shape or P shape. This is just moving down, a controlled sell, if you will. Until we have thin tape, these buyers got stopped out, and then we have a huge influx of volume. This did end up becoming a buying imbalance, and this was a long that I should have taken, but I did not. So we all miss trades. It happens. Alright, see how sellers tried there. Oh, one more thing. Actually, I'm sorry, I forgot, and I X'd out of this picture so I can't pull it up. I'm sorry. So we had this beautiful bottom pattern that we see a lot. Thin tape, uh, influx of volume, then thin at the end. Very good. And then as we pulled up, we saw a lot of volume being done here. So then we start to get the look of accumulation pattern that we like to see. And I believe this open 30 closed either towards the highs or at least above a majority of the volume, which can give us confidence if we're not long for continuation, right? Most of the volume is underwater. So when the next candle opens, we're going to see that volume most likely provide a floor and continue up. See how sellers try there. Look where we are trading now. We'll cover some in video recap. I apologize for my voice and everything. I believe I'm coming down with something, so I apologize. So we have this huge volume area right here, right? We come down, buyers hold the pivot, and they start coming up. But sellers are trying to sell in here. They want to reject this balance area. And what happens once we're trading here? Same thing we pointed out before. All these people are now underwater, and that's why we ended up squeezing another 20 points or so. There we are. What's going on? All right. Spoke with... Uh-oh. Whatever. I'll read it from here. Spoke with members prior to open that if we opened above our pivot, 36.21.5, full transparency. I did not take this. Yep, I went over this. But that brings on another great lesson. Cash is a position too. Being flat is more than okay. I missed the trade, so what? I did not chase it and get cut up from chasing or from FOMO. That is a win. There's always another trade around the corner, and sure enough, I ended up taking a trade today. Now, that's not to say that there'll be trades for you or me every day. There's been countless times that I've missed a trade, I've missed a fill, or I just mismanaged a trade, and then that was it. Or, yeah, I've just no trades for the day, or I mismanaged one, so I just have a 1 hour loss for the day, and I miss my setup. It happens. And the most important thing is to avoid that, and if you do get that 1 hour loss, leave it at 1 hour. 1 hour, or whatever you're willing to risk, is more, or should be more than doable to make back if your system provides 3 to 1, 4 to 1, 5 to 1, however you trade. So it's all about minimizing your losses and maximizing your gains, right? To have a blanket statement, I guess, but being more specific. See how sellers are trying up here. What do we want to see for confirmation of a sell? Are we seeing it? We'll cover some in video recap later. So this is right before I looked to enter my trade. What do we see on the footprint? Well, we see a large concentration of volume over here. Obviously, the largest volume node of the day at this time was right here. Now we do have large volume here and here, but we do see for the most part a P-shaped distribution. Excuse me, I'm sorry. But something else to point out is this top volume node. Look how much or how many transactions are being done up here. What does that tell us about the market auction? We're not done going up yet. There's still buyers and sellers who are happy to trade up here. What we want to see while we're going up before we go down is exhaustion. We want to see all bulls, or bears, I'm sorry, in max pain. No one is going to short anymore. They are done trying, and then we sell. Same thing if we're looking for a long. We want to see bulls in max pain, exhaustion, and looking at the highs. Now this is obviously simply put. There's ways that we could find this on our footprint, on our TPO and stuff like that. But this is how we see that it is not done yet. So here's the trade I ended up taking, and I said, see how we still could catch tops and bottoms, even if they are not our initial sell area. So as I spoke about before, since we closed outside of balance and we're now trading into it again, there's a few scenarios we could look at, and this is one of them. I didn't have this highlighted on the daily plan because we had no confluence between other things, meaning we have to watch the order flow in this session. And since the order flow in this session did tell us that there was a valid short opportunity, is why I took it. But I wasn't going to put it on the daily plan because, well, I can't tell the future. You have to watch the tape live for this. So, day one of the room, and a member got a better fill than I did. Yeah, they entered at 77, and I scaled in at, well, you'll see. Let me pull it up. You're looking at a 5-minute chart, and I scaled in, I think it was 75.50 to 76.25. And yeah, so I took half off at 5 points. Well, I believe we should get through the trade, I think. Let's see. A CY selling stopped there. I pointed out to the room as it was happening, all in the order flow. All right. So we are obviously looking at a 30-minute chart, as you can see down here. And so when the 10 o'clock candle closes, look at all of this concentrated volume that is underwater. And all this thin tape, this is them stopping out. And this is the majority of them stopping out, and we start to see exhaustion at the highs. That's where we are looking for our entry upon other things on smaller time frames. But look what happens when we pull back into this large volume area. We get exhaustion, buying imbalance, double buying imbalance moving up. What is this? This is all these people who are short selling here who didn't stop out here. Once we're coming back to the break even, they're thanking the heavens that they can now stop out close to the break even, and they provide a floor. Not only them, of course, but there's also traders who are looking to buy off this large volume area. So it's an influx of things. Obviously, it's not just one thing, but nonetheless, we could use the order flow to find these levels before they happen. And I spoke about with members, I already paid myself by this point, so I was unaffected by this. My stop is break even. What happens, happens. But in the case that I didn't pay myself, I, after seeing this, would move my stop to break even just to manage risk. So let's continue on. Oh, that is all the commentary I provided. But I do want to talk about the rest of my trade, because I do feel it is important. So as we started bouncing from here, I was looking for an add in this area. Now, I knew that we were bouncing from here and that I could be stopped at break even. So I was looking to add, and if we were to get our move down, well, more profit. No, and if I get stopped out, I'm not losing anything anyway, just the commissions for how many contracts I would add, which obviously in hindsight, the commissions are very minimal. So I did take that add and moved my stop to my new break even after the add, which got hit. So I was then hit at break even. I got my small trade, and that was it for the day. Now, if I left my trade how I planned it to be, I would have never been stopped out at my original break even and would have stayed into it. So now we move to my next post where I address this with the room. I said, if we drop from here, I'll be sad. I often get greedy and try to add to my position. Sometimes it works, sometimes it does not. I would still be in the short if I didn't add. Happy you got it though, the person in the room who caught it from 77. I know a lot of people involved in trading paint themselves out to be perfect traders. I think we all know that's not the case. This is something, me personally as a trader, is something I'm trying to work on. I think I show my trade theses, are solid. I can get tops and bottoms using the order flow. But sometimes, as if you have been watching the YouTube, I've posted a few times, sometimes I get greedy, and after taking partials, I'm obviously on a smaller position size, and I want to add back to maximize the gains. In doing so, making my average, which was good, to not so good. And a lot of the times, or sometimes, I get stopped out because of my new break even. So reminder, just another reminder for myself, do not try to outsmart my approach. So yeah, I mean, I could have managed this trade better. I didn't, but at the end of the day, it's all about collecting your coin for the day and moving aside. So I will not trade anymore today. 90% chance I won't trade anything else today. And if I do, I'm going to be trading smaller size, and no matter what, I won't let myself go back into the red. I strongly believe that is all, that's a large part of trading, is minimizing risk, maximizing your reward, and not letting yourself, after being in the green, go to red. Just consistent gains. Consistent doesn't mean you have to be consistent every day. You could go days without trading. Maybe the technicals aren't to what you prefer to trade. That is okay, as long as you know where your edge is and trade just your edge. You don't chase. There's no FOMO. That is how we stay in this game in the long run. I hope that all made sense. I hope I didn't blabber too much. But yeah, I'll see you guys tomorrow with my daily plan and the market commentary on StockTwits.